man. Listen, I'm not sitting here having another conversation about you telling me that you got denied again for another PenFed credit card. What's up with that? Listen, I want to talk to you today about PenFed credit card soft pull, okay? Not hard pull, soft pull. And there are 7 mistakes you must stop making to get pre-qualified real fast, all right? I want you to stick around till the end of today's conversation.
One in a million, one in a million, one in a million. You know they're coming up to me, cause I'm just the kind of flower with a stinging kind of beat, but the rhythms getting higher. Go, 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 go. One in a million, one in a million, one in a million, one in.
Welcome back, folks, to another edition of the Awesome Studio Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to talk to you about PenFed credit card soft pull. We're not talking about hard pull, we are speaking about soft pull, okay? Here are 7 mistakes you must stop making today if you want to get pre-qualified real fast, okay? The first thing is income. Not consistently reporting your income increases to PenFed. What I'm trying to say here is when you have a pay raise, when you have a hike in your net worth and your cash inflows, you got to report that. Okay, you can't be just working around and just they probably when you actually became a member, you probably were making $25,000 or $30,000, right? And after 10 years, and you're making now 50 grand, you're making 60 grand, you're making 80 grand. And the funny thing is, you have not updated your income to PenFed. That's bad. That's really bad. Okay, so you gotta constantly tell PenFed, you know what? I'm doing fine. I'm just banking right now. All right. So anytime you have a hike in your income, you have to report that. Now, it really doesn't matter whether you report it online or you call them up or you go to a branch. The thing is, you have to report it. Very important. So anytime you have a windfall that raises your net worth, I'm talking about a pay raise. Boss, right now, do you have a raise at work? When was the last time you were raised? And when was the last time you told PenFed about it? Okay, because we have to be in a situation where we are communicating with PenFed constantly. Okay, I don't care if it's $5,000 that you're making extra or $1,000. It's still money. It's still money. I don't care. If you start making 20 grand, right? Okay, 20 grand after 1 year, you're doing a lot. You're doing a good job, and your boss wants to raise you to 25 grand. Well, let PenFed know. You don't have to wait for $50,000 to let them know that you're making $50,000. All right. So you want to talk about anytime you have a raise, just let them know. Let them know. I'm talking about pay raise. I'm talking about bonus. All right. Or you have a new job. Okay. You have a new job and you're making a lot of money. Let PenFed know. You have some kind of inheritance, whatever it is. Money, boss. Money. I want you to notify PenFed anytime you have an increase in income. The second thing is direct deposit. If you don't set direct deposit into a PenFed account, you're making a huge mistake. All right. And your chances of having a PenFed credit card soft pull, in other words, your chances of being pre-qualified for a PenFed credit card are very slim. Oh yeah, boy. I'm telling you, the thing here is that when you have a direct deposit, you are actually, you have 3 benefits that I've talked about on other shows, right? You basically are telling PenFed, hey, number 1, here is how often I'm paid, right? Because they're actually seeing the cash inflows, right? They see, oh, this person has been paid every 2 weeks, or they've been paid every week, whatever. All right, okay. So frequency is very important. Regularity. See, regularity. That's the key word. When we talk about cash flows, we are speaking about regularity. I don't care if you're just making 10 grand 1 month and the next time you make 10 grand is a year from now. I don't care about that. I want you to make $1,000 every week. See, cash inflows. In and out. Very important movement. So the first thing is your pay frequency. So important. Grandpa, are you listening to me? I'm talking to you. Okay? Not setting direct deposit into a PenFed account is really bad. So your pay frequency is very important. The second thing is when you have direct deposit, the pay amount. So PenFed can actually see how much you are making. Yeah. So they don't have to verify your salary because they already see it. They see you are making $2,000 net or $2,000 gross. I mean, they can't see the gross amount; they could see the net amount, but they see the movements every 2 weeks, every week, every month. Okay, and the third thing is your employer, because they know the source of the wire transfer. Okay, so that's kind of cool. So you see, so you have this trifecta. This trifecta that is very beneficial to your relationship with PenFed, and this really helps you when it comes to PenFed credit card pre-qualification. Okay, and there are a lot of other benefits for direct deposit for employees. So you have you don't spend time at the bank or ATM. You access your funds earlier, right? You don't hear about like lost, stolen, or misplaced checks. Okay, paychecks can be deposited directly into more than one account. This is kind of cool. And this is one thing we have talked about, where you are splitting, or instead of having one account, you can have like 3 accounts where you have 40% of your cash going to one account, another 30% going to another account, and another 30% going to maybe a rainy day account. So see, this kind of participates in your wealth management strategy. We're talking about here on this show, we always talk about generational wealth transfers. Okay, you have to build wealth, and you have to transfer it to the next generation. Very important. The third mistake that you must stop making, and I want you to really stop that, okay? DTI. Not seriously working on reducing your DTI. Because I'm talking to you. I mean, we're coming back again to the same table, the same family table, where we're having a conversation about debt to income ratio, because you're not making the changes that you need to make. Hey, make those changes. I'm talking to you about debt to income ratio. All right. So this ain't no acronym that I just invented. This is having a direct effect on your FICO score, but also having an impact on your ability to be pre-qualified for a PenFed credit card. Okay, so you have to see. I don't care what you do, but you got to figure out a way to reduce your DTI. Okay, you need to bring it back to 30%, 35%, and if you're really good, I want you to be around 20%. That's where I want your ass to be at. Okay, 20%. Make me proud. Make your cash flow proud. Make PenFed proud, so they can send you a pre-qualification link. Okay. The thing here, when we talk about DTI, we are speaking about your debt to income ratio, but all the debt payments you have every month. So this is really, when you think, I want you to picture this. You have your paycheck, right? You have your cash inflows, and you have to think about your cash outflows. What are those budget elements that really eat your cash? I'm talking about those minimum credit card payments, auto loans, student loans, consumer loans, right? And other financial obligations. So when I talk about DTI, this is kind of tantamount to talking to you about your financial health, your financial status. Okay, and you have to think about if you have your current housing payments, but excluding mortgage though. Okay, so you can lower your debt to income ratio several ways. Just make sure that you live within your means first. You have to actually borrow less. It's all about saving more. Okay, it's all about finding opportunities for debt consolidation. Because check this out. When we talk about DTI, the debt to income ratio, the debt payments, the interest part of it is also part of the debt. So when you're making $800, for example, every month or whatever on your mortgage, or $1,000, you're probably making $800 in principal and $200 in interest. This is just an example here, but you get the point, right? So it's important to lower the interest part of your monthly payment, of your debt payment. So very important. The third mistake that you are making is not reducing your DTI. Mistake number 4 is kind of correlated to the mistake number 3, and not seriously trying to keep your credit utilization low. What's up with that? I mean, this is something that we, boy. See, the thing here is that a lot of people, they're surprised that they don't have no PenFed pre-qualification offer, and they're like, I'm making a lot of money, and my FICO score is high and whatnot, but I ain't getting anything. Well, because probably your CUR is still high. And I'm talking about CUR being around 35%, 40%. Once you pass the 30%, you are in quote unquote dangerous zone. Oh yeah. You are in a landmine because PenFed is looking at you and saying, this person is really, their CUR is high. What's up with that? Why are they spending so much money? So you want to keep your CUR low, your credit utilization low. First of all, you understand that your CUR has an impact on your FICO score, right? You probably know that already. There is an inverse relationship. So your CUR is inversely correlated to your FICO score. In other words, when your CUR goes down, your FICO score goes up. And that's kind of important to understand that correlation, that inverse relationship, because the thing here is that when you are serious, I'm talking about super duper serious about increasing your FICO score and increasing your odds of getting a pre-qualification link from PenFed, then you know that you need to start working on your CUR. I mean, and nobody trying to force you to work on it. You know that you have to do it. It's about time, boy. It's about time, son. It's about time. So you really have to think about that. So when we talk, the CUR has, I think it accounts for 30% of your FICO score. That's number one. And so we're talking about when we have a high, how high is too high? Anything above 30% is high. Oh yeah. The CUR is kind of analogous to your DTI in terms of the percentage, the portion. So 25% is fine, 30% is fine, okay? And so if you want to lower because lenders look at your credit utilization ratio, lenders including PenFed, as a mark to sort of gauge, your credit worthiness. And if you want to lower your credit utilization ratio, it's important to pay down any credit cards, to obtain new credit lines, to obtain a new credit card, right? Because the whole thing is you want to increase the limits that you have or decrease the outstanding portion on the limits that you have. Very important. And also keep your paid credit lines open. Simply because you haven't charged anything on that credit card for a while doesn't mean you have to close it. No, keep it open. I want to talk to you about your PenFed MPR, your multi-product relationship. So not seriously building a banking relationship with PenFed is one of the detriments. Okay, one, it's acting in a bad way is acting against you when it comes to boosting your odds of having the PenFed pre-qualification, the credit card. Okay, this is important. So we have to be in a position where if we were serious about having a credit product from PenFed, I'm talking about personal loan, personal credit card, or whatnot, you need to be serious about reciprocating. What I'm trying to say here is I'm not asking you to give 25 grand to a PenFed because they were giving you a 25 grand credit card. No, but I'm just saying you want to park some of your cash with them. And this has to be reflexively. It has to be systematically. Okay, I mean, it has to become a reflex, second nature for you, boy. Okay, son, daughter, I'm talking to you. I'm not just sitting here having a monologue or something. No, we're having a dialogue. This is a conversation. Okay, grandpa, grandma, you are here. Okay, so you want to get serious about building your relationship with PenFed, and I'm not talking about just the parking peanuts, kind of small amounts of cash with them. No, we are speaking about building, about buttressing, about solidifying our relationship with PenFed rather. And you want to open a checking account, and systematically and reflexively, when you want to open a checking account with PenFed, you want to go for the Access America. This is where the juice is at. Okay, we're talking about an account that allows you to have rewards on credit cards. Access America. That's the checking account I want you to open. The next time, if you don't have it now, I want you to open it now. This is really important. Okay, and as I've said before, beside your checking, you can have a savings. Okay, so at minimum, you want to have two accounts with PenFed. And I'm not talking about having credit accounts. When we talk about having a relationship, that's something people get it twisted. Okay, we hear this all the time. People talking about, well, I have a relationship with PenFed because they actually I have credit cards with them, auto loans, I have student loans, well, daughter, I'm talking to you here. Those are debt products. Those are liability products. This doesn't count as relationship. PenFed's looking at your ass as exposure, risk mitigation, credit risk, default risk. No, relationship means you have deposit accounts, accounts in which the money is yours. Okay, open IRAs, open savings account, open CDs, certificate of deposits, open MMAs, money market accounts. That's what I'm talking about. I'll be right back right after this. Don't go anywhere.
Finest, young Mr. Killer, and call me señorita. Ay, papi, got me dreaming. My legs up on the ceiling. Oh yeah. I know when he come, he ain't never gonna leave. No. Hit it the night run, and that's the way I wanna be. So don't think I'm the one to won't ever be enough.
Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still here having a conversation with you about the PenFed credit card soft pull, the mistake that you're making that you need to stop making, okay? And mistake number 6 is payments. Not paying all your bills on time all the time. Oh yeah. Boy. Uncle, aunt, I'm talking to you. Hey. Yeah, you. Yeah. What's up with your payment history? Are you regular or you are irregular? You have to be in a position where you have to be regular in your payment history. And I don't care what kind, I don't care. Listen, I don't want to hear your excuses. Like, we're blah, 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 blah. Hey, I don't want that. Okay. You know why? Because life happens to everybody. Okay. And there's something called reminders. There's something called apps where you can automate the reminders when it comes to paying your bills. Okay. And if God forbid, good Lord, if something happens to you, I want you to call your lender. And you want to be proactive, not just walking around and just sitting your ass on the couch and just wait for the end of the month when the payment's due. And that's when you start realizing, oh, I need some cash now. I can't believe blah, blah, blah. People start calling you and you start ghosting them. So they have to actually hire a collections agency to track your ass out. What's up with that? We got to really, we have to be mad at those irregularities on the payment history. What I'm trying to say here is that you want to have a discipline in place so that when you are in a difficult position to pay your bills, you are proactively reaching out to the lender. Okay. Bottom line is you have to figure out how to improve your payment history. If you're currently in a category where you are having a spotty payment history, okay, pay on time. If you can't pay, just contact the lender. Dispute not misreported payments on your credit reports. Avoid underpayments. Establish a bill paying routine. That's what I'm talking about. Let technology help. You have a lot of apps nowadays. People go on their mobile. They just go for crazy things. But when it comes to paying their bills, they have no app for that. What's up with that? Wow. So there are a lot of benefits of paying your bills on time. Okay. I'm talking about helping improve your credit score. Okay. Avoid penalties from your lender. And you have to worry less also. Okay. And so all those things matter. And PenFed pays attention to that. If you're not paying your bills on time and you have a history, you have a checkered history when it comes to bill payments, you have fewer chances of having a pre-qual offer from PenFed. I want to talk to you now about another, this is number 7. The mistake number 7 here is that not stopping occasional overdrafts in your PenFed accounts or accounts, plural. Oh yeah, you know the funny thing is people believe that when we talk about credit, it's only like your credit score. People only talk, they only think about, well, this is credit card, loans, lines of credit, but overdrafts also constitute an important element in your liabilities. You know why? Because this is actually a debt. An overdraft is a debt. If you didn't know that, I want you to know it today, because there are folks and this can be consequential too. Okay. There's something called check systems. So if you have a lot of overdraft, you have a checkered banking history, you can see your ass in that check systems, and you don't want that. So what I'm trying to say here is that you want to make sure that your PenFed accounts actually is clean in terms of overdraft. I don't want you to have any non-sufficient fund event. We don't want that. Okay. What I'm trying to say here is that you just want to you want to live within your means. And if you are issuing checks, if you are making payments, make sure you have enough money in the accounts. And everything goes back to what I said earlier about budgeting. about wealth management, about generational wealth transfers, about the ability to monitor your expenses. Okay? And we have to be in a position where I'm not asking you to have a PhD in accounting or financial reporting or budgeting for that matter. I'm asking you just to take a piece of paper and write down all your expenses on a monthly basis and compare that to your income and trying to live within your means. That's all. Nothing complicated. Okay? Live within your means. I mean, if you have to eat out once a week or whatever, bring it back to twice a week. Cook at home. All right? And trying to be in a position where you are avoiding overdrafts, because PenFed is they are keeping tabs on all those overdrafts. Okay, and if they see a pattern, if they see a history of overdrafts, this tells them that this person is not financially responsible. So they're not going to send you a pre-qualification link, credit card link, if they realize that you're not financially responsible. Okay, because there is a correlation between your credit worthiness and your financial responsibility. Oh yeah. Okay, this is important. So bank overdraft and your credit score. Now, bank overdrafts by themselves do not affect your credit score, but they do affect your banking record. Okay, and PenFed also reports the data to check systems and other credit reporting agencies. Okay. Thank you so much for your attention. I really appreciate it. In today's conversation, I was talking to you about PenFed credit cards, soft pull, the mistakes that you have to stop making if you want to have a pre-qualification link, an offer from PenFed. Okay, so I spoke to you about your income, your direct deposit, your debt to income ratio, your credit utilization ratio. Okay, I spoke to you about your MPR, your banking relationship with PenFed, your payments history, and last but not the least, your overdrafts. Thank you so much. God bless you. I'll see you next time. But until then, remember, stay marvelous.